Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. I took a short break to step away, to look at the charts with a clear mind and understand where price action may be heading. I hope you understand and keep watching this channel. 6 days ago in my last video, I explained that after breaking out of the steep descending trendline, I expected Bitcoin to revisit the yellow horizontal level around 94.2 thousand. That level aligns with the slower descending trendline that has been holding price down since the peak on October 6th. Since that last update, exchange-traded inflows have turned positive for several days in a row, adding roughly 138.4 million since the 27th of November. But the key point right now is this: it does not matter what inflows look like, and it does not matter what the heat map shows, because Bitcoin is currently moving almost one-to-one with the SPX and the Russell indexes. When they move down, Bitcoin moves down, and when they move up, Bitcoin follows. You could say the asset is now tightly connected to traditional markets, almost as if it has been pulled onto a shorter leash. The positive side of this is that the SPX itself looks healthy. Yesterday, we even saw the Dell family donate $6.25 billion toward investment accounts for 25 million children who will be born between 2025 and 2028. Those funds will be invested directly into the market for their future. In the broader macro view, many analysts expect traditional markets to peak next year before any slowdown. And do not forget the banner cycle concept, which I explained in a full video. The coming hours and days will reveal whether Bitcoin can push above the yellow levels around 94.2 thousand and break the descending trendline. But again, much depends on how traditional markets move. Bitcoin is currently testing the descending trendline and the horizontal level at 94,000. If we close above both with clear daily strength and real volume, the downtrend from November becomes invalid. The first upward target is between 96,500 and 98,000. This is the nearest supply area and the first low volume zone that needs to be filled. If momentum continues, the next target is the psychological 100,000 region. On my chart, the key level is 100,600, a major resistance where we should expect a reaction. If price pushes through that zone, the next target is the larger supply block between 106,500 and 108,500. This is where the previous major decline began and remains an area of strong resistance. If buyers maintain strength, the next potential area is around 115,000, the place where price consolidated before the final drop in November, and the full recovery target of the entire move down, say it's at 120,000, the final visible supply zone. Momentum indicators do support at least a move into the first target area. Wave trend shows a clean reversal from oversold with a potential anchor trigger setup. The MACD is crossing upward with rising histogram bars. The RSI broke its downtrend and still has room to expand. So after a confirmed break above 94,000, the most reasonable path is 94, then 96.5, then 98, then 100,600, then 106 to 108, then 115, and finally 120,000. This idea becomes invalid if price rejects at 94,000 and closes under 92,000. Keep the structure simple. I will keep updating you once anything new comes up. Join the free Discord for real-time insights. Please leave a comment, it really helps the channel. Click the like button if you got value from this video. Subscribe and turn on the notification bell to stay updated. And see you in the next one.